Discounts are an important factor in the closed-end fund market, where funds often trade at prices below net asset value. Ken Fincher is a portfolio manager at First Trust Advisors who has focused on closed-end funds for over 20 years. Ken, looking at closed-end funds and looking at the closed-end fund universe, can you share a year-to-date perspective on discounts? How do they compare now versus the end of last year?
The discounts we've seen at the end of the first quarter have actually come in quite a bit. It was a good first quarter for closed-end funds overall. If you look at the three main sectors, municipals, taxable fixed income, and equity, all finished higher. So discounts have actually moved closer in as share prices had outperformed net asset values.
Given the current discount landscape, what areas of potential opportunity do you see for investors across the various closed-end fund sectors?
You know, there's numerous opportunities. It all depends on each individual investor. A lot of people had given up on the fixed income side for dead with the fact that the Fed is starting to move rates higher. Municipals had a tough end of last year, but they bounced back nicely in the first quarter. So there still seems to be an appetite for tax-free income. Moving over onto the taxable side, a lot of people are focused, again because of Fed rate hikes, are focused on shorter duration taxable fixed income funds. And so you look at some of your high yield and some of your senior loan funds as areas where we've seen vast improvement and narrowing of the discounts. And then finally, if you move to the equity side of the ledger, what you see is people again looking for funds that are performing. Had a little bit of a bull market here to start the year, and people are looking for funds that actually have caught fire during this first 3 months.
What drives the discount trend toward narrowing or widening? Is it all about market demand?
While market demand plays a large role in whether or not discounts will narrow or widen, it is not the only thing. A number of other issues that you have to take a look at is any type of corporate governance issues, any sort of institutional involvement in a fund, and then finally is the belief on where that fund is headed in the future. It's safe to say that not all funds are created equal and not all sponsors are created equal. So sometimes a wide discount means just that the fund may not be worth holding inside of your portfolio, just as a narrow discount might be that the sponsor has done such an outstanding job that investors are attracted to that sponsor and want to be involved with what they are doing.
As investors consider making a purchase, how important is the discount as a factor in the decision?
Discounts are but one factor. We don't focus here on strictly looking at funds at the biggest discounts or for that the biggest yields. Again, discounts are an important factor to look at, but they shouldn't be the only thing that investors look at when addressing whether or not a closed-end fund is a value in the secondary market.